Thank you, Flores. I had to do a little correction on the bio. Obviously, you guys are working on a slightly more outdated one. I am now actually the Chief Content Officer at CoinDesk, so I'm actually taking on a bit bigger role at CoinDesk than I was when I was just merely the advisor there, and not as much of a role at MIT. Anyway, it's a thrill to be here to talk to CZ. The first time I've actually had a chance to chat to you, CZ. I've been dying to do so for some time. So this is going to be fun. Let me also explain the fact that I'm sitting outside. I think it might actually be a nice frame for where I think the conversation is going to go right now. But as we are all doing, we're all working from home, and it turns out that I didn't figure out that on this particular day, these workmen in my place were going to be drilling and sawing and everything else. So I've stepped outside and sort of jury-rigged the setup, hence the background that you see here right now. Anyway, CZ, it's a pleasure to have you with me. I actually want to lead on this particular issue, right? The world has been turned upside down by this pandemic. And I think it's had sort of a really profound effect on how we imagine the future of the global economy. We've seen central banks try to grapple with it. The Fed obviously just on Fed infinity, essentially, just throwing QE as far as it can. And plenty of signs that it's pumping up stocks, but there's not necessarily going to be solving the core problems that we face. And I had a conversation with Neil Ferguson, the monetary historian, a while ago, and we talked about how what we've seen with a lot of the COVID response is a failure of centralized systems. The WHO, the World Health Organization, calling the pandemic too late. Clearly, the U.S. government, the federal government, has done, I would suggest, a pretty crappy job. And yet you've seen certain places in a sort of a localized way deal with it constructively. So there's a decentralized solution that's come up for it. So in some respects, it's a moment for crypto, right? It's a moment for the technology and the concepts that this community deals in. But I wonder, how do we articulate this moment, right? How does you've got your hands, you've got interest quite broadly across this space, right? Numerous tokens trade on your exchanges. You've got interest everywhere else. You've really seen this from that big picture. How do we make it so that how do we actually get this technology and these ideas to a point where they are relevant to the problems that we face specifically right now, and that therefore, adoption and everything else can come? What are your thoughts on that?
Sure. Michael, thanks for having me here. And it's a great pleasure. I think this is a very broad topic. And I think in a few senses, if we just look at Bitcoin or cryptocurrencies, we're definitely seeing a sort of a perfect storm forming around cryptocurrencies. Because as you said, we have the Fed's printing money, we have the COVID-19, which is basically halting all the productions in the world. And we have cryptocurrencies that's anti-inflationary and are being able to be used all around the world in a decentralized way. So from the data we're seeing a lot more users coming into this space. Why has it not taken off more than it has already? There are sort of both positive and negative effects in the traditional economy that affects Bitcoin or cryptocurrencies in general. When the stock market crashes, the stock market is like 1,000 times bigger in market cap than cryptocurrencies. So when the big Titanic ship crashes, then it has a drawdown effect on everything else. So if you're a stock trader, let's say if you're an institutional trader, if you're losing a lot of money on stocks, you may sell some of the crypto to just cover some cash. So we're seeing that there's a high correlation right now. But I think longer term, we will definitely see the effects of crypto coming through. But we're already seeing a large number of users coming into this space right now, and people are interested in learning about it. And there's also a few limitations in the cryptocurrency space ourselves. We have not made cryptocurrencies really easy to use. Like for a normal person, like for a normal non-tech person, like say a normal user, it's pretty hard for them to secure cryptocurrencies themselves. Even if they want to use a centralized exchange like Binance.com, they still have to follow a lot of security precautions to keep this account secure, so that like their money are not stolen by a hacker with a virus on the computer or stuff like that. So just sort of this usability aspect of it needs to improve. The security aspect of it, the security of easy to use aspect of it needs to improve. And thirdly, there's also the problem of there's not enough real applications today, to be honest, right? So payments is a very obvious use case, but it hasn't really taken off yet. There's a lot of use cases which are obvious, but to be honest, it feels like we're still in like 1992 or 1995 of the internet space. So there's a lot of good ideas, but the real Amazons and Googles and the real applications hasn't really taken off. So that's hindering a little bit of the adoption curve as well. But overall, I'm very confident with the overall direction of these things. This thing only has one direction to go. Adoption will increase, applications will come along, security will be improved. So yeah, I mean, the general direction is very clear.
So, we've heard this, for some time, right? We are in the Mozilla phase of the internet, if you like, right? That we're still getting to this. The Googles haven't arrived and so forth. I think, that the development of something as complex as a decentralized trust architecture for the Internet of Value is something that inherently takes a lot of time. Also, if it's managed through a decentralized teamwork structure, it just makes the whole thing even harder to build. But at the same time, the general public are going to say, look, you've been saying this now for 10 years, right? So when and how? I suppose I'm just intrigued to see how we articulate what the sort of the big narrative is here, right? I mean, what is the story that we need to be telling about crypto? And you made the point about how we're now locked in this correlation with this stock market because it's this huge Titanic that's just moving everything else. But for many people, the narrative for Bitcoin was it's a safe haven, right? It's an uncorrelated asset. So what is the story we should be telling about Bitcoin and crypto now? What is the big meta narrative that will sort of drive this technology and adoption going forward?
Sure. I believe very strongly that it is a safe haven asset. But we got to look at it on a longer term horizon. On a day-to-day basis, you will get affected by the bigger market, the Titanic that's moving around. But if you look at a 10-year horizon, Bitcoin, I think, outperformed every single stock. Even if you look at a 5-year or 3-year horizon, it's probably outperformed most of the traditional assets. And there are, speaking of adoption, 10 years sounds like a long time, but if we think about like where internet was in, like, say, 2000, Amazon wasn't that big, Google wasn't that big, eBay was there for 5 years, but a lot of the infrastructure doesn't work that well. Even just video conferencing, right? Like the conferencing we're doing right now, it's only really taking off in the last 5 or 6 years, and in a lot of different places in the world, it still doesn't work that well. So a lot of these things take a lot of time to build, and e-commerce was also only within the last 10 years, and internet has been around for about 30 years or so at least. So it does take some time, and there's also another factor is decentralized applications are really hard to build. So with centralized applications or platforms, for example, with Binance, we can say, look, this product's not working so well. Let's release a different version. Let's change the rules. Let's do a promotion. Let's do a giveaway. Let's do a competition. And if a competitor comes along, we can react to it. Whereas if you're developing decentralized applications, you got to think of all these situations ahead of time and bake that into the protocol. Once you bake all those rules into the protocol, and that can't really change. So we see Bitcoin, Satoshi Nakamoto did a really good job with like the blocks halving every 4 years, how the mining works, how the blockchain works. And to be honest, I think Ethereum did a really good job with the sort of smart contracts, etc. But getting all of those things right up front for a more complex real user application is really, really difficult. For example, if you can imagine a decentralized Uber, right? So how do you structure the incentives so that a car shows up automatically and have the right incentives, rewards, so that you can compete with a centralized platform? So I think in the decentralized world, it just takes longer to build apps, to build applications, and it takes more tries to get the rules, the protocols all right. So it just takes longer. But we're just finishing up the first 10 years of Bitcoin, and to be honest, most of that, like the first 5 years, people don't believe, like a lot of people don't believe what Bitcoin is. So I think we just got to the point where we know that Bitcoin works. And we know this thing will continue. So now let's build all these fancy applications on top of it. So it's going to take, I think, at least another, I don't know, a decade or so. So, but
have patience, in other words, I think, right?
Yes.
Yes. So one of the areas that's certainly taken some interest, I would say, in the past year, is stablecoins. Not only has there been a surge of issuance and demand for the oldest of those, Tether. We've seen all these other versions of it emerge, and Binance itself has its own BUSD stablecoin. There's how do you see it fitting into this moment? I mean, there certainly, it seems as if at a time where there are dollar shortages around the world, everybody's scrambling for them. I think in the developing world in particular, we're seeing problems, which is why I think we're seeing a pickup in Bitcoin and crypto in Africa and Latin America. The idea that stablecoins could play a kind of a rescue role, if you like, in resolving that shortage and providing a payment function is compelling, but it's still like a fairly small story. What's your outlook for this sort of stablecoin story going forward?
I actually think stablecoins has a pretty important role in this crypto economy. So before you have the fiat, which sits in banks, and then you have the pure crypto, like the Bitcoin, Ethereum, BNB, highly volatile prices, etc. So there's no happy intermediary. And having a stable coin now, there's an intermediary where the value is pegged to fiat currencies, and but we can move that asset on the blockchain, which provides a lot more freedom. So when Binance first started, we didn't have a bank account even. So people were just using like stable coins as a way to hedge. And today, most people still need a stable coin or a fiat currency peg. Because, well, number one, most people are still thinking in terms of fiat currencies, just because that's the way they're trained. Number two is if you're a shop or if you're a business, your costs are most likely still denominated in fiat. So you still have to pay your fiat costs. So if you're like a shop, if you're selling online merchandise, you have to convert that. You have to, let's say your margin is 20%. You cannot withstand the sort of volatility in crypto. And so as soon as you receive payment, you want to convert into stable coin. And at least that way it locks the value in. So that's still a very important, what I call intermediate step. I personally don't like stable coins. I don't hold any stable coins myself. I don't really use it myself that much. But I do see that as a very critical component. It's a very helpful component for this industry that it bridges to like sort of a polar gaps where there's a small step in the middle. So it makes things much easier for people to adopt. So I think stable coins are very important. The earliest stablecoin, USD Tether, of course, has the largest market cap, and it has the network effect because it's one of the earliest ones, and almost every exchange supports it. So and more people are going to use it. The network effect is going to continue. It does have some risks, because it's like less audited, etc. So that's why we issued the Binance stablecoin, the Binance USD stablecoin. We also have a Binance BGBP, the British Pound stablecoin. We also have a Korean Won stablecoin. So hopefully over time, we just want to provide more choices. But I do think, and also lastly on this topic, I think stablecoin, the word stable is like a completely misleading, is a very completely misleading word. And I think the fiat currency is going to devalue given that there's so much new supply coming into the ecosystem. So I don't think the value is going to be stable, but that's what most people use today. So it is what it is. So I think stable coins are pretty important.
Yeah. So the you would see basically the world moving toward essentially using native cryptocurrencies as payment vehicles, as mediums of exchange, and the stable coins are sort of a stepping stone to that, I suppose. So yes. Look, let's talk about Binance a bit, right? You guys are the biggest fish out there, and you seem to have a frenetic activity, energy, creating all these new products all the time. And you started out, really riding the ICO boom, which fizzled. What was your thinking at the time, and how did you transition to all these other services that you're now providing that like stablecoins and others that seem to be sort of sustaining you at this stage?
Sure.
It didn't really fizzle either way. It blew up, I think, is a much better way to describe it, to be honest.
Sure, yes. So I think we got very lucky when we started like mid-2017, and then we caught the tailwind of the rise in 2017. So, and we did a few things right, and we not only caught the wind of that, we became the world's #1 exchange. And today, I think we're very lucky that today exchange is one of the more profitable, sustainable business models in crypto. So we were, and even after the 2017, 2018, when the altcoins are less active, we were able to sustain a large, relatively healthy volumes in terms of trading and revenues and a sustainable business model. We've added a lot more different services around Binance, around the crypto model now. So we now offer a lot of fiat gateways. So today we launched, you can now buy cryptocurrencies with credit cards in 180 countries on Binance.com. So, what we saw is, yes, in 2018 and 19, the altcoin temperatures really dropped, right, compared to 2017. But there's a lot less new coins coming to market, which is actually not a bad thing because the strong projects in 2017, they're now doing well. Of course, the majority of the projects do fail. That's just the way startups work or new businesses work. So, but at the same time, we also offered much more services now. So it's a much more complete service. Like we have staking, with futures, margin. All of those are relatively revenue-generating businesses, and we also have mining pool. So we were lucky that we were able to sort of sustain the business and sustain our growth in terms of both of the team size and also our business. So now we offer a much more complete ecosystem, more of a complete ecosystem kind of view. So yeah, I mean, so far things are going well. We have a very passionate team, and they just work really hard.
Speaking of staking, announcement just a couple of days ago, I think, where with Consensus Codify, you will be others are launching a staking service for Ethereum. I think that's gotten people interested because clearly that's not going to roll unless Ethereum 2.0 actually gets launched. We've been waiting this for a long time. How soon, have you got any inside knowledge on this? How soon do you think we're going to sort of move to proof of stake on Ethereum?
I actually don't have any insights. I mean, I chat with Vitalik once in a while, but I don't even think he knows how long it would take. Ethereum 2.0, one of the tricky things about Ethereum is they are now widely used. So when a product's really out there already, bringing the next super upgrade, like a big upgrade like that, is super hard. Yeah. Especially now. If they want to solve some of the fundamental performance issues, you got to really change a lot of the core infrastructure. Sharding is really hard to do in a decentralized manner. So all of those problems are really, really difficult. But I think Ethereum, Vitalik surprised me even with the first launch of Ethereum. I didn't think he could deliver, but he did. So, they did, not just himself. I think him and his team. So I think, we just got to give it a little bit more time. I don't know when they will deliver.
So how do you envisage the staking service playing out? I mean, I find that's a really fascinating concept because it kind of essentially you're taking the custodian role, which has its own controversy. And I want to talk a little bit about decentralized exchanges in a moment, but and you're turning that into a service. You're essentially playing a bit like a bank, like a deposit holder, paying an interest rate, right? In this case, in terms of staking rewards. Do you ever worry that in the process we're just rebuilding the old fractional reserve banking system?
It's a little bit similar to that, to be honest. I think the proof of stake, POS, when they designed that, they didn't think about centralized exchanges. So the big centralized exchanges will gather sort of the coins naturally, and there's a very strong network effect. The bigger ones gets bigger. And today, there's still just a lot of users, especially if right now, I think we have about 0.1% market penetration in terms of all of crypto. So probably 1 in 1,000 people have a crypto in the world. So, but if you want to get to the 1%, a 10%, a 50%, we got to get a lot more non-technical people in here, right? So we're gonna attract sort of the normal guys into the crypto space. Those guys, they don't know how to do cold storage, secure backups, and all of this stuff. So they much prefer to use a centralized exchange to hold their coins. And when we hold coins for our users, we want to distribute the staking rewards to our users. So we will do staking for them. This is just to protect their financial interest. We made a couple mistakes in the past where we kind of somehow got involved in voting that we were not supposed to, and we don't want to do that. We don't want to do that going forward. We don't want to vote on other users using our users' assets. We want to distribute the financial benefits to them. But as more and more users use centralized exchanges, then the staking, the POS, the voting mechanism changes a little bit. So it is a little bit going back to the sort of the kind of like a bank thing. What we could do is we could implement voting features on the platform so that people who hold coins on our platform can vote on the platform, and we can relay that kind of vote onto the blockchain. So you kind of still relying on a centralized service to relay that onto a decentralized blockchain. We can do that when things get heavier. Today, I think we still don't hold that much. There's a couple coins we hold a lot, but for most of the coins, we hold less than 10, 20%. So, yeah.
But you'll have to hold up to the community that you can be trusted. I mean, I know you know there's various other forms of transparency that you can apply to that, but the community is, quite skeptical, quite cynical sometimes. And obviously anything that would distort the voting and give these big exchanges that much power is a problem. So, what sort of measures can you put in place to assure that there is that transparency and that you truly are hands off in terms of the voting function?
I think, even today, it's already pretty transparent. The actual voting that happens on the blockchain, people can tell which wallets voted. And the Binance wallets are all public. So even though we support like a few hundred coins, every coin community knows which are wallets. And when we make a vote, people will know. So we actually can't do that. We don't want to do that. So I think we definitely don't want to get into like governance issues of 100 different blockchains. I think the users should decide that. Whoever holds the coins should decide that. Today, in most of the cases, we don't vote. So if users wants to vote, they actually have to withdraw coins from Binance onto their own wallets to vote. And some coins have like a lock period of 13 weeks or stuff like that. So I think it's already pretty transparent. That's a good thing, but that's the beauty of blockchain. So it's actually not too bad right now.
So you've got the DEX though as another alternative project that's a completely different model, not custodial. It's a decentralized exchange. I mean, ultimately, it seems to me if we're ever going to move to a world where be your own bank is the mantra, and that is the true story behind crypto, that you have total control of your assets, that's where everything has to go, right? Yes. Where is it? First of all, the BinanceDEX, how developed is it? How capable is it? This is difficult technology. And secondly, again, if we're talking about people moving to proof of stake and staking, is that at all possible in a decentralized exchange structure?
So the BinanceDEX is actually progressing quite well. It is one of the most high performance DEXs out there, and the user experience is actually, I think, is quite good. But I guess for most retail users, just holding their own cryptocurrency in a hardware wallet or in their own wallet, that part is difficult. So the BinanceDEX has pretty decent volumes. It's probably one of the highest volume DEX out there, but it's still less than 1% of our centralized exchange in terms of volume. So that goes to show that 99 people prefer a centralized exchange because it's just easier to use. I personally actually really want to promote DEX. I think DEX is the future. So I think once we get to a point where the wallets are really easy to use, people will start using DEXs more. And with DEX, there are some other issues as well. The trading history is very, very transparent. You can track which address trades which, how frequently. So that may be a privacy issue as well. But those issues can be solved. There are different ways to increase privacy on any blockchain or even a DEX. So I personally think, like, I don't know, 5-10 years later, DEX should be bigger than centralized exchanges. And that's why we spend a lot of effort building DEXs. From our perspective, we really want users to hold their own coins. We don't want to hold the coins for them. It's a huge risk for us. It's very expensive. We need to build a lot of infrastructure around security, risk monitoring, all of this other stuff. And I much prefer every user hold their own assets. We provide them with a really high performance DEX. It's really easy to use. They trade. We take a little cut in commission. Or the network take a little bit cut in commission and spread around whichever nodes processes the block gets it. I much prefer that. But today, most people still prefer a centralized exchange. That's just the way it is.
Yeah, but I mean, obviously, to that point you were making earlier, to get there, we're going to need to have people feeling comfortable. Maybe wallets need to be easy to deal with. There have to be, there's solutions around multi-party computing, for example, MPC wallets. Those sorts of things may make things easier. I'm always of the belief that eventually we'll get to a point where you can pretty safely hold your own keys, or at least have some structure in which you really know that no third party can intervene in them. And that we'll get there eventually, but it's a very, very complicated process. So speaking of complicated things, a lot of buzz around DeFi. We've got more than $1 billion now in locked funds in the DeFi world. You've seen an emergence of all these other secondary products on top of it. There's DeFi insurance. There's a whole host of services that now are building on top of that. What's your view on it? I mean, I think it's an untested experiment. Sometimes I look at it and think we are potentially creating a doomsday machine, because essentially these algorithms could be hacked, and we could be creating so much collateral and so much sort of excessive leverage in the system that it could unwind in a rather painful way, a little bit like what happened in 2008 in the real world. But clearly it's exciting, and then people are interested in it, and there may be these other sort of checks and balances in it. That's my take. What do you see there?
I totally agree with you. It's basically the untested experiment, and which is what we're testing right now as an industry. So I think there are definitely a lot of risks involved, and we don't know how it's going to turn out. And with anything new, there's probably a very high chance of a higher chance of failure than succeed. So probably, I would say again, the majority of the DeFi project may fail, but a few of them probably will succeed. And just those few succeeding will be enough to push the industry forward. DeFi is really interesting now because when things are running on the blockchain, it provides equal access to people all around the world. So people in Africa who does not have access to traditional financial services can suddenly potentially use a DeFi solution. Whether how well that works or not, we don't know. Some of them will fail, some of them will succeed. So I think more will fail, but the ones succeed will succeed much bigger. So I think it's a really exciting space. But do know that if you're, I think this is so early in the industry, because 1 billion sounds like a big number, but compared to like stock markets, it's like I don't know, 0.001%. So it's not even like 1 in 1,000. It's much smaller than that. So I think people just got to take that into consideration and understand that it's a very new market. It's an experimental market. There will be some failures. There will be some blown up risk management. People losing their potentially savings, etc. But so just understand the risks. But I do think the overall direction of it is very promising. I think we should experiment more.
What I find exciting about it is that it speaks to, I think, the broadest concept that really sort of took me into this space, and that is that we now have an architecture upon which to sort of reimagine the financial system itself. So it's taking the idea of this settlement layer that is decentralized and sort of discovering how you can use that to remove so much of the friction that exists in a trusted world, to then build all these other products on top of it. So I wonder whether you've got any thoughts on that, because crypto lending, for example, is now just a burgeoning industry in itself. In addition to DeFi, there are sort of more traditional structures that people are talking about using smart contracts as a way to manage the collateral underneath that, and that Bitcoin may well become this really important collateral asset, for example. You got any views on that more broadly in terms of where the future of I see I have a ladder now passing me here. Where the future of this broader financial system, the credit world, everything else evolves out of this.
Yeah, absolutely. I think I think DeFi is very promising in one regard, which is relatively transparent. So how much is lent, how much collateral there is, etc. In the traditional world, it's very opaque. Once in a while, not once in a while, you can pretty much assume a lot of the banks are way over leveraged, etc. And especially with the current environment, we see a lot of bailouts by governments. I really hate the bailout idea. I think if something should fail, it should fail. Something new will take its place. When you start doing bailouts, you get companies who are too big to fail. because you don't let them fail the first time, and then they get bigger. You don't let them fail again, then it's a vicious cycle. So I think so I think having this decentralized finance is actually much better. There will be a lots of failed experiments, but the failures will be painful, but they will fail when they're supposed to fail, and new opportunities will be provided to newcomers. So I really like this aspect of it. I think this is very different from the traditional sort of opaque and full government bailout processes. And I think the bailouts are just getting way out of hand right now. It can't continue forever. So I think this is probably also a reason why the decentralized finance is DeFi is so popular right now. It could be the reason. I don't really know. Yeah.
Well, we'll see now. So sorry to bring up a painful story, but you did have a fairly difficult incident last year with the hack. 7,000 Bitcoin was stolen. What are your lessons from that? I mean, and talk us through what that was like. I mean, there was some sort of brief conversation about how we could, there was some conversation of what to do about it in terms of the Bitcoin blockchain. But what were your lessons you took from that moment, and what was it like?
Well, I think the lesson is really nothing is 100% secure. So you always got to continually upgrade your security. There was a weak point that a number of hackers leveraged, and it caused us some damage. It's significant damage. At the time, it was roughly about $40 million. Luckily, we were big enough to handle that. We have a very sustainable business. We have a reserve. We have a Saifu fund to cover that. So the Saifu fund covered that completely fine. No users lost any money. We're still in business. We're still servicing everybody. So we took the hit. So it's a very expensive lesson. But at the same time, to be honest, it's actually a blessing in disguise. So as the team grown, of course, there's always trade-offs between implementing a business feature as quickly as possible and then doing the full security audit, a full secure way of doing things, etc. There were a lot of advanced security ideas we were talking about, but we didn't really get a chance to implement. Having that instance changed our priorities right away. So everything gets implemented very quickly. So it's actually a blessing in disguise. It is a painful lesson, and we learned from it. We protected our users. We took a hit, but it is what it is. We keep moving forward.
But it does speak to the problems that we were talking before about sort of being your own bank, the custodial issues, the challenges of all of that, and the narrative, right? I mean, lots of people constantly outside of this space point to hacks and losses and say, why would I want to own something like that, right? What do you see as beyond obviously better security, which is clearly a lesson here, but you can never have perfect security. What else do we need? I mean, and is there kind of an infrastructure around insurance, for example, that is valuable here? I'm sorry about this noise.
It's okay. Actually, yeah. So there are a lot of interesting concepts that arises from that. One aspect is sort of security. There's also the sort of centralized exchange security versus personal security. I actually think more people get hacked. Hackers get more money from individuals hacking individual wallets than from exchanges, because we actually do spend quite a lot of effort. We are the bigger target, but we're also very well protected. So we spend a lot of money, a lot of investments on securing our systems, and we have a lot of very advanced processes in place and procedures, setups to protect the assets. So it's even though it's a bigger target, but it's a much tougher target to hit. And it's bigger amount of money. It's a bigger amount of coins being held, but they're much easier targets. Individuals holding, like, say, a couple $1,000s, a couple $100,000. They're much easier targets because they cannot invest at the same amount that we invest in. So that aspect of it. The insurance aspect is really tricky as well, because with cryptocurrencies, it's very difficult to tell how the money is stolen. Let's say if somebody makes a copy of the private key, which actually haven't happened to us. But if let's say somebody insures all of our holdings, if the money just suddenly disappears, it's very difficult to tell who took the money away. Is it insider job? Is it the funder who took it away, or is it some hacker who took it away? Is the forensics are much harder than somebody robbing a bank, like especially physical cash. So how do you evaluate the risk on that to sort of price the premium for the insurance is really tricky. So most of the insurance in the space are limited in scope, and they're also a lot of insurance are done by sort of affiliated entities. So a company investing in a insurance fund that basically want themselves insuring themselves. We have an insurance fund that we take a cut from our revenues, and we put into that onto a separate wallet so that we can use when emergency.
But it's a self-insurance plan, is it?
Yeah, that's very much a self-insurance plan. Most insurances in the industry are still self-insurance plans, to be honest. I think as time goes on, when the sort of processes are better, when we have better sort of multi-sig wallets, etc., and those things become more established, I think the insurance space will take off more. Right, today it's just a little bit harder to do. Yeah.
Do you see a possibility for decentralized insurance plans? I mean, in the DeFi space, we have Nexus Mutual growing quite well as a protector against, smart contract breaches and things like that. Obviously, a very, very small space still, and relative to how big it needs to get. Is that a solution? A kind of a mutualized, everybody is essentially buying in through a mutual decentralized system?
Yes, I actually think that's a really good way to go, which is to say, look, everybody pitches in, I don't know, $500, and if something happens to the insured guys, then everybody loses a little bit. So it's kind of decentralized insurance, where it's like a crowd insurance.
Right.
I really like those concepts. So I hope somebody will take a stab at it and do something with that.
So, you cast your mind wide, and it seems like you're always sort of ready to flip and do something new. What are you excited about now, without giving away the magic sauce?
Well, contrary to what you said, I'm actually not thinking about doing anything new. So I think today I'm already having the best opportunity that I can get. I think basically, if I think,
ZZ is staying still.
Pretty much. I mean, like, if I think about what's more interesting I could be working on, I mean, there's not that much. I mean, today I have an opportunity. I'm given an opportunity in a place where I can help to contribute to increase the freedom of money for people around the world. I mean, that's a really, really meaningful thing to do. I don't think I can quit today and retire, relax on the beach and play golf. And that's super boring. I'd be bored in 20 minutes. I can do another startup. I can go work for a big bank. Like, all of those things doesn't mean anything much. So I think I already have the best job that I could get. It's not even a job. I already have the best life. This is a lifestyle initiative. So I'm already doing the most meaningful thing I could be doing. So I think I'll stay on this mission for a little while. I don't have to be the CEO for Binance for a long time. If another stronger CEO comes along, I'm more than happy to let them run the organization. But I think I'll stay in what I can contribute into this mission, which is to increase the freedom of money for people all around the world. I think that's a super meaningful thing to do. So I'm not thinking. So actually, I don't do any personal investments. I don't invest personally in any project. Every investment we do through Binance. I don't have any side projects. I don't become advisors of other projects. So I don't have anything on the side going on. So I keep it very clean, just Binance. This is the most meaningful thing I can do. I'm going to put like 200% of my energy on it, and just see how it goes. I'm pretty happy about it too.
Okay, good. Glad to hear you're happy. One of your recent investments, of course, was CoinMarketCap, which I wouldn't say we at CoinDesk necessarily see as a competitor, because it's not really a news site, but it certainly is a competitor in terms of internet traffic and interest in the crypto space and coming into this world. So, really, we're always specifically intrigued about this. Inevitably, you the guys are the biggest exchange around. Of course, CoinMarketCap is now acknowledging that. There are concerns that there's a conflict of interest here. How do you address that? Like, you are both the biggest exchange and, the site that, for the time being at least, is one of the most trafficked when it comes to interest in tokens.
Yeah, so I think basically the way we would address this through action. So I think as long as we continue to build CMC as an independent platform that's relatively neutral to all exchanges out there, so Binance do not take any significant or any unfair advantages. If Binance wants to put an ad on CMC, we pay for it. Even though for us right now it's left pocket, right pocket, but we still do that accounting. So, and we continue to support all the projects in the space. So I think as long as we continue to do that, we should be okay. To be honest, the same situation happens on Binance.com to some degree anyway, with the BNB token being listed. We list many other decentralized exchange tokens. So we're pretty fair about it. We don't like, BNB do get a little bit special treatment from us because we started that project and we are a big contributor to it, but we don't really treat ourselves. We don't really use our advantage to make BNB compete with other, for example, decentralized blockchain coins. So we support others as well. So I think as long as we continue to do that, it shouldn't be a problem. I think whatever I say probably doesn't matter that much. Within a year or two, people will see how we act, and I think they'll be okay with it.
I'm not sure how much time we have. I think we had 45 minutes to start with. I think hopefully they'll probably jump in and tell me to put that noose around my neck and pull me off here at some point. But since we've still got the floor, let's keep going.
Actually,
here we go.
I'm going to have to do that right now, Michael. You called it pretty good. You guys are right on time. Absolutely incredible chat.